Well, the overnight session was doing just fine up until the point of the cash market sessions opening up. Holy moly, talk about a reversal day. You're watching the Daily Stock Market Brief. My name is Michael Silva. This is the show that we do Monday through Friday. We use technical analysis and intermarket analysis every day just to get a good idea as to where the market might be headed next. We got a lot to talk about today, but we're going to keep it short and to the point, so let's get into it. All right, everybody, welcome back. We're going to start with the dollar chart. The dollar is still within this falling wedge. A little bit of a gap down, as you can see. It came back to close that gap and then got rejected. Some indecision still within this pattern. I think that we need a couple daily closes below 89.50 to give more certainty that this thing could continue to break down. As it stands right now, it's still very possible to see this break out to the upside. So we're keeping a close eye on that. Meanwhile, the TNX, looking at the 10-year yield, up 2.15% today. So with a slightly down day on the dollar, a lot of indecision, and we see an up day in the 10-year yield, and you can see here bonds slightly down, but a nice hammer candle looking like it wants to push back up. So we'll see how that plays out. How did the markets react to all of this? Well, small caps up 1.57%. And typically when you have small caps perform this well, you typically get good breadth data. And you can see here, this is the NIMO. I show you a couple different charts. This is the traditional recording. I'm bringing this up just to show you that we are getting into somewhat overextended territory. And this doesn't mean necessarily that it's going to pull back. As you can see, a couple of times when it gets up to these readings, you do see a little bit of a pullback. But there's also times where it can overextend and you get an additional kind of burst of energy to bring you higher and higher. And you can see here on the NYSE did reach an all-time high today. So we're doing so I think that this could be interpreted as an overextended reading. It just needs confirmation. Another thing I want to point out is energy did well. Meanwhile, while the 10-year yield went up, technology did not do too well. Excuse me. Holy moly. I'm just going to leave that in there. Also, energy did very well. Look at this. Oil, WTIC, breaking out of this zone up in here. So we did put in that high, it's a few month high, taking out this one. So this could be the early start of a potential stronger move to the upside. And if you are a part, by the way, of my Patreon group, so thanks to all the Patreons that do support me, the daily trade ideas here, you can get into the Discord. But we've been paying close attention to this on the market brief, and we've been saying pay attention to the energy sector, but we also called these out during the trade ideas sessions. SM was up 13% today, and we call that out significantly before that breakout, as well as CPE up 12%, but that's not even like the least of it there. We had one of our members call out this one, CLR, and that thing was up 8 or 9% today, and then we have this one, GDEN, which is not actually in the space of oil, but it was a great call out, and that was up about 8 to 10% today too as well. So if you're interested in becoming a Patreon to support the channel, $9 a month will get you into the Discord, and then also get to see my daily trade idea videos and or charts that I post. Let's hop into the lumber to gold ratio. The lumber to gold ratio down here, it's at just below 30, and it hasn't been there since early March. So is this going to continue to the downside? Well, let's take a look at chart of lumber. First off, lumber is taking a little bit of a beating here, right? So we saw the reversal type candle here. It's heading down. We saw that bounce, and now we're seeing it head a little bit lower. Can it undercut 1200? Well, let's wait and find out. As it stands right now, we don't have that answer. But if it does start undercutting it, I think the next spot would be right at around 1,000. Meanwhile, looking at gold does look like it's losing a little bit of steam here. It is running into that 26-day where we kind of write out this 26-day trading cycle that was developed by Tom McClellan, and we're running into that. As we can see, the candles are kind of undecided. Now it's really just consolidating. However, it is overbought. The price percent oscillator looks like it's about to cross over, and we're running into this. It seems like it needs to take some sort of a break here, but it's just you got to give the benefit to the breakout, and you don't want to just hop in. You don't want to go long at points like at this, but you don't also want to fight the current trend. You need confirmation. So if we start cracking below 1880, that would be, to me, or even 1880 to just slightly higher. That to me would give a little bit of confirmation that we're taking a little bit of a breather here. Let's hop into the S&P 500. Range bound, we're a few points away from hitting an all-time high in the cash market here. But really, it's interesting because it's very hard to determine direction in the market these last 4 or 5 trading days. Meanwhile, if you look to certain indicators, for example, like the one we just showed at the very beginning of the episode, this shows a little bit different of a story that things are getting overbought. Meanwhile, you see the S&P 500 really just range bound. So this fits the script that we might still see that pull down a little bit into June. However, there's nothing that's been confirmed. It's in full bull mode here as it stands right now. We're above the 5, above the 20, above the 50, above the 200. Now, really quickly, we are going to pull into the smaller time frame chart, 15-minute time frame. You can see here we gapped up in that to the red zone, pretty much tagged the top of it, and we just reverted right back down. This could be forming somewhat of a cliff formation here, or a flag. It's kind of flagging here. So if we start taking out this low of the day here, which was 419.20, the next support area would be right at around 417 to 418. Take note, this moving average, I added in now. Now, this is something developed by, well, it's not something developed by him. It's a 5-day moving average. I'm bringing it onto the 15-minute time frame. It's a best practice that I learned from Brian Shannon from Alpha Trends. He is a pretty well-known trader. I read from his book, Technical Analysis Using Multiple Time Frames. I'm going to start adding this in just so I can get a visualization instead of just looking at the daily 5 EMA or the 5 SMA. I'm going to put in the 5 SMA here, which if on the 15-minute time frame, if you do the math, it's a moving average is 130, and that'll bring up very close to the 5-day moving average. So that is where I'm looking, and you don't really want to get into stocks if it is a declining and the price is below it. You want to wait till it's an inclining 5 EMA and when the price is above it. You can see here it was inclining, so you could pull back, it's following through. But as soon as we crack through, with precision crack down through this, you didn't want to buy these dips because they kept on heading lower up until the point we crossed back through and then finally got here when the EMA started upturning. So very interesting stuff. So I'm going to start putting that into the shorter term intraday analysis. Let's look at the VIX here. VIX could be flagging right here too as well. Look, we got 3 open gaps above us. That's the risk factor. I would start looking for more long positions is if we get a big spike up to the upside. As it stands right now though, we have just a little bit of support right beneath us, right at around 17. We'll call it 17.5. So it's floating within this range. Notice how it got pretty overbought here. And then as soon as it got overbought, it kind of just went sideways for the day. So continue to monitor that. The BP chart for the S&P 500, it's pointing upwards. This is probably due in part because of the gap up, even though despite the end of the day, we started rolling over. But it has room to go up higher and it has room to go lower. So not much to report there. Let's look at the Dow Jones inverted hammer. That's all I want to point out here. You can see the last time we had an inverted hammer very similarly. We took a little bit of a breather. Price percent oscillator does look like it wants to cross over to bullish. Overall context in the daily time frame, it's bullish. Let's look at the 15-minute time frame. Okay, we have the 5 EMA. 5-period daily moving average. I'm gonna just keep saying, I gotta get that into my brain. 5-period daily moving average is sloping up. If we come down a little bit further, that little level right here can act as a support. This zone in here, and we also have a gap. So there's some confluence right at 344.50 for the DIA. Also to note that it is a rising wedge pattern. So if we do break down from that and we get some forceful move to the downside, just be cautious. But it is still an uptrending 5-day period moving average. Transports isn't a bear flag. This is an important formation to just kind of watch and see how it plays out. We look at transports, we look at industrials, it's part of Dow theory. You can see here, big move to the upside, then we pulled down, and now we're kind of consolidating right here. If we break down from this, it's gonna bring us right into this range. Now, if you don't trade the transports or the TRAN, there's IYT, I believe it is, and that's the ETF for transportations. I don't know if it's IYT off the top of my head. I'm pretty sure it is, but you might need to check. 15.625, this zone right in here is that gap that can act as a level of support, and that would be a full measured move of this pull breaking down. So something to keep in mind. BPINDO, this one does fit the script for being a little bit overbought. On the industrials, you can see a pretty high reading on the RSI, 78.52. It's not the exact place that I'd want to go long at this particular point in time. And there's a couple things, obviously, that are signaling a little bit red here. So it's just a lot of confusion, confusing times. And in the conclusion section, I'll talk about more as to my strategy around this and what I've been doing there in the trade group there. IWM, this one, small caps did show that strength. We're right up here at this trend line. A little bit of a hanging man candle, but we did see some good strength come into small caps. Is it going to try and go for a breakout? Well, let's keep a close eye on it. It's still really range bound at this particular point in time, so there's nothing to get overly too excited about. However, this is still very well, if it starts turning down, be still an advanced head and shoulder pattern, with this being the neckline. But right now it looks like it wants to start pressing forward and breaking out. We'll see what takes place in the overnight markets and go from there though. One thing that is a little scary is when you drill down into the 15-minute time frame. You can see here negative divergence, and you can see a very clear rising wedge pattern. Although we do have the 5-day moving average is sloping up here pretty nicely, and that's sticking right around 224.50. So if we start cracking down through that, it's very likely to have that hold as a level of support. So we'll continue to monitor that. The banks are important to the small caps. This gap up could be very well flagging right now, or creating a little bit of a falling wedge. So, potentially we bounce around within this if we start, heading a little bit lower to fill this gap and then head a little bit higher, which would really help small caps. I can imagine that taking place, especially if yields continue to push higher, the 10-year, because when yields rise, that is good for financials. Let's look at Nasdaq. Nasdaq is still within this potential rising wedge pattern right here. We're still range bound. We had the gap up, and then we closed pretty much lower than we have for the last 3 or 4 trading days here. So it's not the greatest looking thing, but we're really just taking a little bit of still a little snooze fest in the Qs. So just be very careful here going long at this particular point in time. We made a very fast move to the upside, and now it's been trading sideways. And when you zoom in to the 15-minute, it does paint the picture that this could be a bear flag that did break down. We have a couple areas of support below us. This breakdown is happening right by the 5-period daily moving average. You can see it broke down through it, and it acted as resistance, and then we started heading lower. Okay, so keep in mind, I would not be looking at this to go long until this can correct. Now, it is in an uptrend, but lately it has been flattening out. So just be very mindful of that. Semiconductors paint a little bit different of a story, and we show semiconductors because it makes up a big portion of the Nasdaq, but it is also showing this big gap up, and then that weakness came right in, and now it's a rising wedge or bear flag. It is on a 5-day period moving average, is sloping up right at around 247, so that can act as a level of support. So keep that in mind. But if this does break down, I could see a potential overshot to the downside of this, and then perhaps then you might see some buyer step in if it wants to see continued strength. The semis have been showing a lot of strength here these last week of trading. As far as the BP chart goes for the NDX, still has room to get more overbought, and still has room to fall. So there's nothing clear as far as that chart goes. All right, everybody, that's all I have for you on today's episode. So let me just reiterate kind of my thoughts and where I'm going into tomorrow. And as I know, as it stands right now for the rest of the week, my plan is to still look for strength in various sectors, right? But I plan on being very aggressive with profit taking. So if you are part of the trade group, you'll notice that if I get a big gap up in the mornings on certain stocks, I'm peeling profits right out of the gate. Not 100% of the profits for the most part, but I am taking profits significantly more aggressively, because it does seem where we're getting some oversold readings, we're getting some sideways action. Yes, the daily time frames are all still very bullish, but it does seem likely, and it would be healthy to see the market take a little bit of a breather, pull down for once in its lifetime, and then continue its trend into summer. So for the first week or so of June, that's still kind of where my eye's at. Me personally, I'm in about 7 positions right now totally. I only do max of 10, and then it gets a little bit too complicated for me to manage all of that. So I'm in 7 positions, and they're not even full-size positions at this particular point in time. And yeah, that's all I got for you on today's episode, everybody. Be safe out there and have a wonderful night.